Hey traders, hope y'all are doing well. I know I'm doing a little bit better. Yesterday was the second day off of the year, right, that I've taken. So it was good. It's good. Recharged a little bit now, I guess, right? So I just wanted to really give you an update on Bitcoin since I wasn't here yesterday and things have happened a little bit. But what really has happened is you made close enough to what was looking like bullish divergence, even though if you're going to be the most technical person in the world, you would consider this bullish convergence because your candle close low, right, is higher than your previous low. So that is to be noted. And the wicks are higher than the previous wicks as well. So um, you wouldn't call it divergence per se, you would call it convergence. Okay. Remember, with divergence, how does it work? If you're going to have divergence, okay, you got to have a low on price and then the same low on price, or you have to have a low on price, a lower low on price, and then your oscillator, right? It takes a big dip just on that first price, and then on the second low, it makes lower levels, right? And that's what gives you divergence. That's class B divergence versus class A, which is stronger. And it's the same thing, right, on your histogram or your RSI, right? So in this situation, you double bottomed with lower levels of negative momentum or relative strength. Okay, that's class B divergence. And then class A bullish divergence when you make a low on price, then a lower low on price with lower levels of negative momentum or relative strength. All right, so class A is your strongest form. Class B is your, uh, you know, class B is your second strongest form. Then you have class C, which, you'd need to make a low on price and then a lower low on price. And then on the histogram, you would just double bottom, right? You'd have the same low, and that's like not does not mean impending price action reversal like Class A and Class B mean. This just means that there's stagnation in momentum or relative strength. So it doesn't really. It could be you look if there's other coinciding variables that might work out, but these are your strongest forms: Class A and Class B. All right. So anyway, that was just on the fly, I guess, education on divergence, bearish or bullish divergence, right? Maybe we could do bearish divergence another time. I could just literally flip this chart around and talk about it, right? So get it. Anyway, so now the idea of the potential, remember X, A, let's see, it's X, A, B, C, D. What if this is going on now, right? I would have expected us to go lower, right? But last night, I mean, at like 2 o'clock in the morning, I was like dozing in and out. I saw this and like said to patrons, it's like, hey man, we got a bullish bullish divergence like alert, and we have a bullish pin bar to boot. And then yeah, now we're up like $200 more. Look, X A B C potentially D. 88.6% retrace would be your bearish crab. But then there's also the chance you could run up here, and if you don't stop, man, there's always the chance that you've got the crab that could be in play. It's always going to be one or the other, right? Most of the time, like if you like, okay, we'll be looking for price action reversal at the 88.6% retrace. But if it just keeps going, then we would have to look. I mean, for the crab, man. Unless I'm crazy here, it's the 1618 only. The butterfly is between the 1272 and the 1618, but the crab itself is just the 1618. Let me clarify that real quick. Make sure I'm not crazy. I need just a good cheat sheet. I need to make it like, yeah, okay, I'm right. Yeah, it's the 1618 only. So I think the crab, excuse me, I think the bat is a pretty good idea because it kind of coincides a little bit with Larley's square up. We have not squared up at this 84.43 area. All right, so think about it. We could break the downswing resistance and run up, okay, and at least test here, maybe run a little higher. But that definitely like seems like a potential pattern developing, right? X, A, B, C. We've pivoted. We made an 88% retrace, right? 86.8, same thing. And yeah, man, now we're on the upside, right? We're looking from C to D. But the problem is right now you're still contained within the parameters of the downtrend, the short-term little downtrend. You are rejecting the 50 moving average, but give it time. Just give it time, man. We'll see how this can play out. All right. So just wanted to go into divergence with you and why it's actually convergence. It's a higher low, and how we might be developing a new harmonic because there was just, look, man, I don't know. Like, how are you going to get down to 7250? Right? We got as low as 7500. How can you get to 7250 for the 886 entry for this pattern that we had, discussed before, when you were already being so weak, right? You were so weak on pretty much a double bottom. Okay, look, like it's like an Eve, an Adam double bottom, potentially two. All right, and I think all these dragons still going on. So, yeah, man, it's promising here, right? I mean, every time you like pivot and you double bottom, you're confirming to the market for the time that the bottom's in. All right, then you rallied up, you sold off again, made a slightly higher low. All right, that's good news. I mean, that's a very good news. I mean, the bulls definitely have the ball still of this market. All right, let's see if we can break the 50, break the down trend line, hit the square up, and then go beyond. All right, so I'll be live later today. This is an early video for me, but hope y'all enjoyed it. All right, leave a comment in the description below. Hit the like button, that bell, that sub. Appreciate y'all. Until next time, respect the T.